Good evening and welcome to Land Title Talk, where we encourage you to text in or email your questions or comments, or you can go to the 904 Now Live app, comment there, or go to the Facebook page for Land Title of America, Inc., and you can comment or ask questions there. But we're grateful to have you here this evening. I'm Steve Collins from Land Title of America. We have Rusty Collins from the Law Office of J. Russell Collins, affectionately known as Rusty Law. And then we have Mr. John Reardon as our guest from University Bank. We're going to talk to John a little bit. And then we also have our dear Julie Settle here, keeping us straight. Say hi, Julie.
Hi, Julie.
Awesome. So, Rusty, normally I like to say what's going on in your world, but today we're going to start with Mr. John. John, what's going on in your world?
Life is good, Stephen, right?
Mm-hmm.
Yeah, so no complaints. Beautiful day.
Okay.
Live here in sunny Florida. Beautiful St. Augustine.
Yep.
Lived here for like 33 years now.
Yeah.
Long time.
Is that all?
33, 30, maybe 33.
I think maybe
Maybe
check your
34.
math.
What is it?
So tell us a little bit
We've known
about
each other for a long time.
Yeah, we have.
Yep.
Tell us a little bit about your company, University Bank. What does University Bank do?
Well, University Bank is a full bank. We have all different loan products. It's based out of, it's actually based out of Michigan. It's over a 100-year-old bank. So it's very established. They hired me to be the reverse mortgage specialist for Florida. So I cover all of Florida.
Okay.
And it's a bank platform. So I could actually originate reverse mortgages in all 50 states.
Good.
All over the country. Yeah.
Have you had other reverse mortgages from other states or primarily?
Primarily Florida,
Okay.
but North Carolina, South Carolina, and Georgia. Yeah, but mainly Florida.
Can you quickly explain? There's a lot of misconceptions about reverse mortgages.
Absolutely.
And some people don't know anything about reverse mortgages. Others have all kinds of wrong ideas about reverse mortgages.
Correct.
And it seems like a very few select people actually understand what they are and have taken advantage of them. And the reason I wanted you as a guest is because I do have lots of questions from people about reverse mortgages. And over the years, I've tried to explain it to them as best I can. The benefits of it, what possibly might be the downside according to what the heirs think. But what I want to do is, first of all, I want you to share with us, what is reverse mortgage, meaning who qualifies, who's eligible is what I meant to say.
Sure.
And just share, and we want to make it sort of brief because we want to get to some of the questions, but
Sure.
But go ahead and tell us real quickly about what a reverse mortgage is and how you qualify for a reverse mortgage.
Absolutely. So the reverse mortgage is actually a very regulated loan. It's made for homeowners age 62 and older. And that's the HECM, HECM, Home Equity Conversion Mortgage. And that's the FHA insured version of the reverse mortgage. And the reverse mortgage was created for people who are retired, homeowners, age 62 and older, living on fixed age 62 and older.
62.
Yes, sir. 62 and older. And remember,
Rusty, how old are you?
I'm older than 62.
He qualifies, John.
I'll qualify.
Break out an application, John.
Yep. And I'm going to qualify at the end of the year.
Yeah.
Myself.
I'm glad I'm not quite there yet. So.
Exactly. So
right.
you'll be there soon enough.
I hope.
I know. Exactly. It's a blessing.
It's a blessing to get there.
It is a blessing, actually. So the reverse mortgage, I love doing what I do. I actually help people stay in their homes, retire and stay in their homes with less financial stress.
How do you help them stay in their home?
Okay. So a typical customer of mine, which is this. Somebody will call me up. It could be a husband and wife. They could be now 70 and 71 years old. Okay. Typically when people are 62 years old, they're not ready to do a reverse mortgage at that time because they're still working. They still have an income coming in. So they're not subjected to being retired, living on their fixed income.
And I want to
Social
stop you
Security
there,
check.
but that's not a requirement. I mean, you can apply for a HECM or a reverse mortgage as soon as you're 62, period.
Absolutely.
So it's not that you have to apply. It's not based on your income. It's not based on any of those qualifiers. It's 62 is the only qualifier. Is that correct?
Correct. For the HECM reverse mortgage.
Okay.
Correct. I'm I remember there was a man who lived off of County Road 210 many years ago. This is probably going on 7 years ago, maybe 8 years ago. As soon as he turned 62, he called me up. He lived in a $540,000 home. He knew that he's going to get the money in the reverse mortgage, put it into the line of credit. And at that time, the line of credit was growing at 8% growth rate. So he knew he'd get the money in the reverse mortgage, set it in that line of credit, and it grows at a growth rate. And he knew it. He was very good with figures. But so let's get back to your question, Stephen. So I'll be succinct and clear. The reverse mortgage was created like a home equity loan for people. It was created by HUD and FHA so that people living on a fixed income, as I stated, they'll be able to borrow a certain percentage of the value of the home.
What is that percentage, by the way?
It starts on the lower end. It's 62, and then each year you get older, you get a little bit higher percentage.
So what's on a 62? What is that percentage?
You'd get about 32% of the appraised value, and then each line. Now, years ago, you used to be able to get a larger amount. They changed the program as the years have progressed. I've been doing reverse mortgages for a long time. Like a 70-year-old is going to get about 40% of the appraised value. It's regulated by the rules of the program itself. Like
so
VA,
an 80-year-old
would get about 50%.
Okay.
So actually, an 80-year-old would get about 60%. Okay. All right. But again, these are estimates. I
understand.
I run the figures for people. I tell them how much they get based on the value of the home. And then I tell them exactly what their costs are because I have to, of course. It's a very regulated loan.
Okay.
So somebody's living on their fixed incomes, husband and wife, Social Security checks. They're now 70, 72 years old. They still have costs to live on. Homeowners insurance. They're now retired for 8 years. Or 6 years. They have homeowners insurance, utilities. Homeowners insurance has gone up. If they live in a flood zone, flood insurance has gone up. They have a car insurance. So all the costs, they might have home repairs. A lot of times, a typical Social Security check for the man is $1,800 a month, $2,000 a month. For the female, for the woman, it's a little bit less,
$1,400. If they have a mortgage
$1,400
payment on top of that, it's almost impossible to live.
Of course it is. Yeah. So what I do is then I run the figures. I have a reverse mortgage program, and I put their dates of birth in there. I put their address. I put their names to come up with an estimate at first for the value of the home, and then I run their figures for them. I tell them what their closing costs are. Tell them how much they can get. They changed the rules again for the reverse mortgage quite a few years ago, maybe 12 years ago, where they don't allow people to get a whole lump sum anymore. You could get up to 60% of the total amount you can get in a reverse mortgage at closing. And then the other 40% has to sit in a line of credit for a year, and then they have access to that. Then you have access to the other.
Okay.
So they don't allow people to get all. But people can get a tenured amount. They can get a guaranteed check for life.
Every month.
That's typically a lower amount because it's like a program that's set up. But yeah, people can set it up that they could get a guaranteed payment for life.
A reverse mortgage can help an elderly person with creating a additional income for them, but also for somebody who has a house payment, it eliminates the house payment.
Absolutely, if they're getting enough in the reverse mortgage to pay that off,
right?
Which then becomes the debt on the reverse mortgage. But absolutely, I've done that many, many times. As a matter of fact, I just ran the figures for a woman. Her husband passed away 2 years ago. She's 74 years old. She owes about $125,000 mortgage right now, still with an $800 a month mortgage payment. But now she's reduced to one Social Security check. So I think she lives in about a $500,000 home. Her appraisal's not back yet. But she's going to get a certain amount of money. She's going to pay off the existing mortgage. Doesn't have that monthly mortgage payment anymore. Then she's going to have that extra in the reverse mortgage. I break it down and I tell her how much she can get. So she's using it as a planning tool for retirement.
You think about this. You have some people who are later in life. They had a a mortgage payment that's somewhat large, they might have a small principal, but you can't just make a smaller payment because you have a small principal. It was amortized, so the payment's what it's going to be. And I think the great thing about a reverse mortgage is they can, because you're not going to qualify for a loan. As a person, some people cannot qualify for a normal loan on a refinancing a debt because the payment's too large. It gives them a chance to get out of that to where they can actually not have any payment at all.
Absolutely. And I want to say one very important statement I want to say at the beginning of our conversation. They can do this whole reverse mortgage loan process, but remember, there's no payments required on the money. Like it's a home equity loan, except no payments required. The rules are, though, because there's rules
Taxes
to make sure.
And insurance.
Correct. People always have to pay their homeowner's insurance, and I want to succinctly say that because it's a very important rule.
Right.
It has to be their primary residence. They always have to pay their homeowner's insurance and property taxes and maintain the home in good condition. Absolutely. That's the rule.
I guess you have to then prove that you can afford at least your taxes and insurance.
Correct. Years ago, and this is actually how the reverse mortgage has gotten better. And there's not as many defaults or foreclosures. Years ago, they didn't ask people for their income. So somebody could be living on an $800 a month Social Security check and not have enough money to pay for
taxes and insurance.
Correct. So they do the reverse mortgage, spend through the money, and then those were the stories that we would hear of people losing their homes because then they couldn't keep up with the homeowner's insurance and property taxes. And years ago, we would hear the stories of older ladies, older women were being put out of their homes because of the reverse mortgage. So they put an income qualification in now to make sure that people have the basic income to cover their taxes and insurance. And another rule that they changed, which again, many years ago, which is what makes reverse mortgages have a negative flavor for some people. Because I saw them many years ago, we saw the news reports of the older woman being put out of their house.
Right.
Okay. I'm very serious about what I do. I always want to protect people with their roof over their head. This is their homes. They have nowhere else to go. So years ago, when the rule was if somebody was to do a reverse mortgage, say the example of an older gentleman, say 65 or 66 years old, he's older than 62, he could do a reverse mortgage, but he's married to a 58-year-old.
I was going to ask you that question.
Or a 59-year-old or a 60-year-old.
Or
it's younger.
He's 65 and his wife is 50. What do we do in that situation?
Absolutely. So years ago, unscrupulous loan officers, or to skirt the issue, that couple wanted to get the money in the reverse mortgage.
Right.
So they would drop the younger spouse from the deed to do the reverse mortgage because they wanted to get the money predicated on the older person's age, because the older you are, the more money you get. And then, so they would drop the person from the deed. They do the reverse mortgage. Now the woman's not on the deed anymore. So the man lives another 3 to 5 years or whatever. He passes away. The reverse mortgage loan comes due. So the woman has to come up with the money that they spent. And then, the woman's in a bind.
Right.
Because she's not on the mortgage.
What's the rule now?
The rule now is...
Can a person who's 62 with a 50-year-old wife get a reverse mortgage?
Absolutely. The rule now...
so they changed that.
Correct. To make it better and safer for people. Oh, absolutely. So the rule now is they're both on the deed still, but they predicate the money on the younger person's date of birth, so they get a little bit less.
Okay. And John, you think about the issues that we have, Rusty, in the situation of husband and wife who were both previously married. What can happen to the title if you take the wife off a title?
Not a good idea, because it's just homestead then. And
then what?
Right.
Then you may have a life estate only.
So the wife would only have a life estate interest.
Right. Typically, if you have separate kids.
Well, if they did.
She could opt for a 50-50 ownership if she wanted to. But
for homestead?
Yeah, homestead, you can opt for 50-50. But the bottom line is, I've seen this happen.
Right.
I've defended cases where this happened, where husband died during rescission.
On a reverse mortgage.
Mortgage.
Of course you would have a story like that.
And I'm like, but they still dispersed the loan. I guess he wasn't able to
rescind.
Oh, that's interesting. Yeah.
Yeah, so it's in default immediately.
Right.
Well, not in default. It's called due. It's matured immediately.
Oh, yeah.
And they took her off title. And I fought that one hard.
Mm-hmm.
And?
Lost.
What was the resolution?
Resolution of there was a foreclosure sale.
Okay. She's losing the house.
She lost the house.
Okay. So this new rule change is actually saving people like her from not getting off title and being subjected to a risk of, because a reverse mortgage, no payments, no income qualifying except for the fact that you have to qualify to pay your tax and insurance. That way you don't have any payments. But the one thing that makes, or there's a few things, there's three things.
And there's also, they got to make sure there's enough income to pay for a square footage cost for utilities. For the square footage of the house.
That makes sense.
I know, absolutely, I know.
But the one
it's actually a very good program now.
It is. But the one thing that makes a reverse mortgage due is the death of the borrower.
Mm-hmm.
We can't call him borrower. We can't call him a borrower.
They are. Yes, they're borrowing. Yeah, a homeowner or a borrower.
Okay. Homeowner. I'll say homeowner because they don't really have to pay it back until they die. Which is very interesting.
Or when they leave the home.
Or if they move out of the home.
Right, correct.
If it's no longer a homestead, then the debt becomes due and payable.
Correct.
Rusty, what are some of the complaints that you hear about a reverse mortgage? What do people say about reverse mortgages?
Well, first of all, you're spending my inheritance.
Right.
Okay, and
that's the child saying that.
That's the child saying that.
Correct.
But here's so if mom and dad need $500 a month to survive, and they got 3 or 4 kids, if you don't want the reverse mortgage, cough up some money every month.
And send it to mom and dad.
Correct. Which I always say there's always a mixed bag of if kids want the parents to do the reverse mortgage or they don't want the parents to do the reverse mortgage, right?
Right.
Because sometimes the kids are actually having to give money to the parents because they see them going under. So then they encourage the parents to do the reverse mortgage.
We've talked to many people in over the years with reverse mortgages. And in that situation where parents are struggling, and we've seen the children very supportive, they understand the cost. The cost is the equity in the home is going to be used to pay the debt. That's what's going to happen.
Correct.
Right. So
and they're not borrowing full equity. They're not borrowing 100%.
No.
So typically there's a lot of equity left at the end.
And there could be, and maybe not, but there could be. And so the point, and the property is also appreciating annually.
Absolutely.
In a perfect world. And so I've seen these children who have a struggling parent, who think selflessly. In my opinion, I say selflessly. Would you not agree?
Maybe.
Right. Exactly. I know. Exactly.
Like a true attorney.
I know exactly.
It's not selflessly, that they want their parents to enjoy their life now. This gives them a way to do that. That the financial burden of having a house payment, if you go out and rent, you got a payment. In this situation, they don't have a payment. But the give is the heirs have to understand that their inheritance is going to be less.
Not the house.
No, that's not true. Because
the balance.
If they inherit, you've done probates or determining homestead, for people who have died, who've had a reverse mortgage, we just get a payoff and there's plenty of equity left.
Sometimes there is.
Yes.
Well, like I said, they lowered the amount that they give people. So nowadays, I think there's typically more equity left because FHA was getting hit with too many foreclosures. Because I used to say, if you're 70 years old, you'll get about 70% of the appraised value. Okay. They literally have dropped it. If you're 70 years old, you're only going to get about 40% of the appraised value because it's an FHA insured loan.
Right.
So if the housing market implodes again, and the houses are worth half of what they were like in what years?
2022?
Not 2022. No, like 2007.
You're talking about the crash.
Right, the crash.
Well, the crash
when
in 2006
houses
and
were
7.
worth half. Right?
Understand.
So this is an FHA insured loan. So if the houses go down, the amortization schedule I give people is set up at a 4% growth rate because it's just you have to set it at something.
3 to 4% is average.
Correct, it's average. But so somebody does the reverse mortgage. If the housing market goes down and the loan balance goes above it, the person passes away. Right? The rule is the kids don't get the house. It's an FHA insured loan. FHA takes the hit. Or if the kids want the house, they get an appraisal done. It's 95. They will pay 95% of the current appraised value, even if the loan balance is above the home value. Yes.
Okay, I'm pretty sure that made sense. Say that one more time.
It's very simple. If
I
you're
appreciate you saying that.
Yeah,
if you're upside down,
then you can do a payoff at 95% of the appraised value.
For the heir of the...
For the heirs. The heirs
Correct.
can do a 95% payoff. The problem is if you're trying to sell the property, you're going to have that in expenses to sell the property.
that's awesome. I didn't know that reverse.
But they're not beholden to if the loan balance has gone up and the home value is going to... So if it's like $30,000 or $40,000 above the home value, right.
Yeah,
You
but
see,
Rusty,
that's
you could, if that home is something of value that you want to keep, that is an awesome option.
Oh, yeah.
Because then
Yeah,
you
these
are
the rules.
95% of the value. You can refinance that,
At 95%. Yeah.
right?
And
Maybe a little money into it.
I mean,
That's a very interesting thing.
Well, they're not losing the house, even though the loan balance has gone up, because again, it's the rules of the reverse mortgage.
Well,
Yes, sir.
let's talk about a person who passes away. Okay.
Well, right.
What do you want to say?
Well, okay. So the amount of money you're allowed to get on a reverse mortgage is based upon your age. The younger you are, the less likely you're going to die
Because you're going to live
anytime
longer.
soon.
Right.
There's actuarial tables for this that, depending on the interest rate you're talking about, will determine what the likelihood of death is. And I think they take it to 100 years old. I think
Correct.
So they figure how likely you are to die at 100. And I guess after you go to 100, somebody comes by and says, "We love you, but you got to go."
Correct. Yes.
Someone's
going to tell you that.
Logan's Run.
Yeah, Logan's Run.
For those who don't know that movie, don't check it out. Don't look at
Soylent
it.
Green.
Soylent Green.
Exactly.
See, I saw that movie.
Logan's Run and Soylent Green.
Well, I saw Soylent Green when I was like 9 years old.
Yes.
I saw that movie when I was about 30, and it was PG.
Which one? Logan's Run?
Logan's Run.
Yeah, it's good. Most things are covered.
That thing missed its R rating.
Yeah.
That was that time period of the 70s when those movies came out.
Yeah, those were
right, with Charlton Heston in them. Remember?
Oh yeah.
Yeah. So,
But
all right. But we digress.
Yeah,
Go ahead.
I know.
There's actuarial tables that figure that out. So the biggest issue I see, number one, I flew to Pensacola once and closed reverse mortgage in the airport for somebody.
Okay, yeah, I could see that.
So we got
sure.
mom and dad, but then we had the 4 kids there too, looking at me. Okay, like, what are you doing to my parents? Okay, it was interesting. I flew there, did the closing, got back on a plane, flew back. And the thing that was bothersome was I had to fly to Atlanta first, and the time from getting from the gate to the runway in Atlanta was longer than from the time to get from the runway to Pensacola.
Exactly.
That's what sticks out. But anyway, so the things I see come up, number one, we're no longer taking the younger spouse off title, which was always a bad idea.
By the way.
Was it
Beautiful.
Absolutely. It was horrible what happened back then.
Okay.
When they did that.
That's a big deal. The other issue is what sometimes happens is the borrower, especially with limited income, gets dependent on the line of credit to pay their annual taxes and insurance. And then they get to the point where they've tapped out whatever they can get right now, and then the servicer ends up paying for those taxes and insurance. They want their money back. The borrower doesn't pay that back, and then they go into foreclosure. I've seen that happen more than once because for some reason, the borrowers are not prepared or they're not staying up with those taxes and insurance. Plus, when you let your insurance lapse, the servicer is going to go get forced placed insurance, and that's expensive because there's no underwriting. It's give me an address and how much.
Right.
Okay, so that's very expensive, and I've been in those foreclosure cases.
But may I add to that?
Yeah.
Yeah, absolutely. There's been many reverse mortgages that I've done because the people literally can't afford the house anymore, right? Okay, so they do the reverse mortgage, they put the money in a line of credit, and it sits there. And right now, the line of credit is growing at about 6.5 to 6.75% growth rate.
Now, when you say that, okay, this HECM is home equity conversion.
Home equity, yes, correct.
So what you're saying is they're not pulling money out and putting it somewhere else. They're actually just letting it sit there, and
it's growing, and then they can pull from it as they need it.
Right, but it doesn't accrue interest or anything. It's just money you haven't borrowed yet. But it does. How much you can draw goes up a certain amount.
Yep. So let me. I want to be very clear, because we say the loan balance has the interest rate attached to it, what the loan balance is growing by.
Whatever you disperse.
Whatever, right. But it's an adjustable rate mortgage now.
Correct.
So it can go up or down. Okay. But the line of credit actually has a growth rate.
Right.
And we call it the growth rate. We don't call it growing by an interest rate. And right now the growth rate is about 6.5% growth rate. So the money people get in the reverse mortgage sits in an account, line of credit. It's actually growing.
And again, this is land.
And it compounds. Yes, sir. And then what they do is, I've done this many, many times. So I tell them how much they're getting. I show them so they can get the funds that they're requesting at closing wired to their checking account. Some people take it all because they have credit card debt. They're doing the reverse mortgage. They're going to pay off 2 credit cards, or even an existing mortgage, paying off an existing mortgage and 2 credit cards that are at 24% interest rate.
Right.
I just helped a woman do that. She had $20,000 in credit card debt. She took the money into reverse mortgage, paid off the 2 credit cards. So right there, she's saving monthly payments.
Right.
Absolutely. And then so the way it works, they're going to get a certain amount of money based on their age. I show all the figures. They can get some of it at closing. The rest can go in a line of credit that's growing, making money for them at a growth rate. It's set up that way. And then they can pull from it. It's an account, and they'll get monthly statements showing what their loan balance is and what the line of credit has grown to. And I've set up many times where people can pull just every year to pay for their homeowners insurance and property taxes out of the line of credit.
John, if somebody has a question about this specifically in their situation, how do they get a hold of you?
They can call me 904-982-2210. I'm local. I'm
here. Will you repeat that number,
of
please?
Course, 904-982-2210.
Okay.
And I'm local. And
then call you, text you, and ask questions.
Absolutely. On Facebook, John Reardon. They could send me a private message, and I'm happy to answer. I get referrals all the time, and I answer. I love what I do. I help people stay in their homes. Is this your way of maybe trying to wrap up, or are you just asking how to contact?
No, I just want to make sure they know how to contact you.
Yeah, 904-982-2210. I'm always happy to answer questions. I love what I do. So let me just give you a couple more of examples of like people I've helped.
Well, before you do that, John, I want to talk about one of the concerns that we hear about. And again, it has to do with people who don't understand what happens when mom or dad dies. How long do they have before the reverse mortgage is called due? What time period do they have to either refinance it? Because remember, they're going to have to do an order determining homestead, which is a court process. Mm-hmm. And once they get that order determining homestead done, then they're going to have to try to refinance it or sell it. What is the time frame from the date of death before that has to be completed?
Okay, the loan is due upon death of the last person.
Right.
However, it's my understanding that the servicers will give you 6 months, and if you need it, they'll give you another 6 months.
Correct.
Okay.
To get the probate done, but you need to show that you're doing something.
Correct.
Okay.
You got to show that you're doing something. You have communication.
Okay.
And then remember, people like, say if somebody lives, I just helped a couple. They live, I won't say exactly where, but I won't say their names. They live down near Crescent Beach. We just closed last week. Absolutely. $756,000 home. They had a first mortgage and a second mortgage. They had payments. So they did the reverse mortgage, paid them both off, and took $20,000 out at closing to put into an emergency account. And because their flood insurance and homeowners insurance went up. That's what happened. So if you think about it, they only borrowed, so they were 77 years old. So they only borrowed about 47%, 50% of the appraised value. They didn't take it all at closing. So maybe they owe about $300,000, right, on the reverse mortgage, paying off the first and second closing costs, taking $20,000 out. If they both pass away, the kids are going to get the house, the debt that's owed is like $300,000. You see what I mean? So they're not borrowing full value.
There's equity there, and they can also,
Correct.
like I said earlier, is if they wanted to, they could actually refinance the house.
Absolutely. And then the
there.
kids have a Florida home.
That's
I
true.
remember one lives in New Jersey and one in Washington.
Now, Rusty,
Yes.
People don't understand foreclosures, okay? And one of the concerns that I've heard, and I've tried to dispel that concern as best I could, was that, oh my goodness, I've been named in a lawsuit. Now my credit's been hurt. Can you help people understand why that's not the case on a reverse mortgage?
So when your parents borrow money, even on a credit card, or they have whatever debt, when they die, you don't inherit their debt. Okay? There's no operation that I know of in the law that says...
Just say there's no operation.
There is no operation in the law that says we've erased mom and dad's signature from this note and we've put your signature on it.
And there's no exception to that rule.
No,
You
there's no
don't
exception.
owe your parents debt when they die.
Right.
The
Correct.
estate
Now,
does.
the estate does. Now,
Right.
if you were to receive an asset, like in a summary administration,
Right.
and hadn't taken care of creditors and the creditors weren't barred, they can come after you for whatever you got.
They can come after the asset.
Well, they come after you for the asset. If
They
you got
come after
cash,
the asset.
If they were given cash and you spent it, they're going to come after you. You're
Okay.
liable for it.
Rusty, but they're not personally liable for it, and nor is it going to affect your credit.
Well, these mortgages, your name's not on the loan.
Am I right?
That's
it's not
correct.
Right. It's
It
not.
does
So
not
people got to
affect
understand.
you.
Yes, if you inherited money from an estate, or you got an asset from the estate, and there's creditors going after that asset, yes, they go after the asset, but they're not going after you.
Correct.
Not in that.
It's a non-recourse loan.
Right.
That's
and
well,
so
yeah, in fact, the note itself says that the lender will only go after the
correct.
property.
So if I
Right.
inherit the property and I get a lawsuit against me,
That's just to clean the title up.
but how do people understand? How do you explain that to people where they understand? If you're named in a lawsuit, it doesn't mean it's affecting your credit or it's hurting you in any way, except for they're just trying to take out the interest that you've inherited.
That is exactly correct.
And so that's not something that a child should be concerned about when thinking about a reverse mortgage.
Correct.
Well, if my parents die, then they're going to have a foreclosure on my name. That's not the case,
Correct.
right? I mean,
the foreclosure in your name, it doesn't affect your credit because you're not an actual borrower.
right. So, and I mean, that's just one of those things that I've heard people complain about, but it's not a reason, in my opinion, to allow your parents to suffer. If your parents are tight and they need help to live a more full life with the few years they have left, give them that room to breathe every month, then a reverse mortgage is a good way to provide that for them, in my opinion. If all the,
And
there's a lot of
Stephen,
variables.
I've seen both cases where the children see the parents having a hard time, but they want the house. They don't want the parents to do a reverse mortgage because they want as much money.
That's just
So they
selfish.
tell the parents not to do. Absolutely, I've seen it happen.
Yeah, I
but
think
then,
that's
like I said
selfish.
before, I've seen kids been helping the parents.
But to Rusty's point,
So
that's it. To
correct.
your point, well, if you're not going to let them get a reverse mortgage, well, then write a check to mom and dad every month.
And then sadly, I've seen parents do the reverse mortgage because they're still taking care of that 50-year-old and that 40-year-old who still is not on their feet,
Right.
and they're still going to bail that kid out.
Right,
And
I've seen
it's,
that too.
It's heart-rending. Absolutely. It's
Well, they'll spend the
heart-wrenching.
money that they had on their line of credit to help that kid, and it's lost money now.
Absolutely.
John,
it's
Again, give your
so
phone
frustrating.
number so people can get a hold of you.
yes,
What's
sir.
your number?
904-982-2210.
Do it one more time for me.
904-982-2210. And my website, if you wanted to, www.floridareversemortgageinformation.com. floridareversemortgageinformation.com. It goes to my University Bank website.
And people can call and ask you any questions. There's no question that
Call
is
me
out
up.
of line. I mean, no one's going to offend you.
Never. No, conversation is great.
I think
Discussion
you're
is great.
unoffendable.
Yeah, well, I love what I do. I'll answer every question, right? Because I love it.
One of the
Yeah.
issues that comes up with people who are looking at it or talking to their friends about a reverse mortgage is, from a closing standpoint, when you look at a closing statement, the fees appear to be higher.
Mm-hmm.
Can you explain how that works and why they appear to be higher? Because I kind of know why, but I want you to explain it.
They are, excuse me, they are considered a little bit higher because it's an FHA insured loan. remember, all loans have different rules, right? Right. VA loans have certain rules. Conventional loans do. Okay. This has its own rules. So reverse mortgage closing costs are MIP, 2% of the home value right off the bat. So that's a big chunk of money, actually. That helps create the reverse mortgage program. And then origination fee is set up, maxes out at $6,000. Can't go above that. It's capped at that. And then regular settlement costs from a title company.
Here's one of the things
but the MIP is typically what adds that extra amount, 2% of the home value.
Right.
Which is the reverse mortgage program.
The reverse mortgage document itself is not written based upon the amount of money you're getting at closing or have access to at closing. It is it's a lien based upon what the fully max value would be. So your doc stamps and intangible tax are going to be based upon that higher number. Even if you're only having access to $175,000, you might have a $400,000 mortgage that does that, depending on your age and everything like that. So that can be a bit of sticker shock, but it's not like somebody's ripping anybody off.
Correct. And here's something interesting too. In regards to that, I literally think Governor DeSantis recognized that like a year and a half ago. Changed the rules so the doc stamps are on the amount borrowed. Yes, sir. Research. I
haven't seen that, but that would make sense for him.
He did.
He dropped our commercial sales
He dropped
tax.
the amount.
Oh, well. Okay.
He absolutely. He recognized that as a problem with reverse mortgages, and he corrected it.
Well, that's pretty impressive.
I know that. So, Rusty, when you get a chance, research that. I don't know the correct language, how to phrase it, but he did. Absolutely. Yes.
Well, I bet you he's going to check it now.
Yeah, I'd love him to. Yeah.
Remember,
I'd love him to. Yeah.
When you have a HECM, okay, you've got your note for a maximum. It's a so-called promise to pay, because you got to use that word, even though it's no recourse, to pay the maximum amount of the total max loan.
Right.
Then there's a contract that explains how you get access to that and how your line of credit or your maximum balance right now is determined. Okay. And so there's two different loans happening. We've got the maximum security because, again, we want this program to work. So the people, there's investors for these things.
Right.
Okay.
Yeah.
And that's actually one of the best investments there is. It's like money. Okay. Because every one of these loans is backed by the full faith and credit of the United States people, just like your dollars. Okay.
Yeah, it's an FHA insured loan.
Right. But the investors are protected. And these are like Ginnie Mae loans, so they're government insured. But we want them paid back, but we got to have a security that works for whatever the maximum value could be. But I'm surprised, although pleasantly surprised, if the legislature changed the rules for the doc stamps to where if it's a reverse mortgage, it's based upon the line of credit you're getting at closing.
And research that, because I don't want to misstate, but I know he did. He lowered it. Absolutely. I love it.
So I can clarify that a little bit. Back on July 1st of last year, he reduced the doc stamps on the reverse mortgage by basing on the principal limit rather than the maximum claim amount.
Exactly
There
what you
go.
said.
I know.
That's the number.
I know.
Exactly what you said,
absolutely.
John.
I know. I love it. And then let me just add.
And that right there drives the cost extremely down.
Absolutely. The closing costs down, right? Because they were overpaying. Right. I know. It was absolutely. And then just a couple more examples. I love what I do. I keep a roof over people's houses. I just got a phone call.
Hey, John.
Yes, sir.
It's not an infomercial.
No, but I love what I do. It's
Sorry,
amazing.
John. Sorry,
I know. I got a phone call from a neighbor.
Is this sponsored by you today?
What is it?
Is this sponsored by you today?
No, go ahead.
Okay.
I know. We've been friends for a long time, so I'm good with it.
Okay,
exactly.
Yeah. No, we do know that you've got lots of good examples.
Yeah.
What I want people to do is I want them to who do they call?
Me?
Ghostbusters.
Exactly.
What's the number?
What's that website again?
www.floridareversemortgageinformation.com. Right. And then that goes to my company website. And my phone number is 904-982-2210, or look me up on Facebook. I'm always happy to answer every question.
This is
your third. This is your third interview. I love it. I saw the other two; they were great. Megan,
thank you.
Megan Wall was
Megan
great.
Wall was great. Yes,
she's great.
So, and John, so in a nutshell, when you have a person who's struggling with their monthly income, or they're struggling with their house payment, or whatever their personal struggles are,
call me up.
Call you up.
That's it.
Because what's the downside? You're going to tell them this isn't right for you is the worst case scenario.
Absolutely.
Or this is the best thing for you and here's why.
Or I explain exactly how it works. I explain how much money they can get. And then if it works for them, I help them do it. Absolutely. Sometimes people decide not to do it.
Okay.
And then, but absolutely. Yep. That's what I do. I help people do it.
Well,
Yep.
thank you, John. This is Land Title Talk. Again, we encourage you to call in. I keep saying that because we did it for like 5 years. 5 or 6 years saying call in. You can text your questions or comments or any questions you have for this group here at 904-501-4481. Or you can comment on the 904 Now Live, or you can go to Land Title of America Inc. Facebook page and comment there. You can also email us questions during the week. I'm Stephen@GoLandTitle.com. That's Stephen@GoLandTitle.com, and we can also bring up your questions during that time. Rusty, we've got 15 minutes.
It's not enough time.
To ask what's going on in your world?
Well, okay, so I think I talked about a case.
And by the way, John, we want you to chime in when you hear him talk crazy attorney stuff that makes no sense. Call him on the carpet for me.
Reel him in?
Reel him in,
okay.
John. I know you can do it.
I've known him for years too,
yes,
so I've heard him go back. Yes.
Reel him in if he gets out of line. Go ahead, Rusty.
So,
15 minutes. Go.
I had a client who rented a property owned by a company, and the property was in a local subdivision that has an HOA. And my client came to me because they were getting ready to get evicted because they were accused of violating the covenants and restrictions.
I guess in a lease that can be part of the lease, right?
Oh, yeah.
Yeah.
It could be a term of the lease. And it kind of makes
By the way, I have to interrupt you. I know time's short. If that's not part of the terms of the lease, can you still be evicted for violation of the covenants restrictions? If it's not in the lease?
It might be in the covenants and restrictions.
Okay.
Okay, because I've seen it before. Okay. But this is a company that owns 10 houses in the subdivision.
Okay.
Okay. So they have a lease that's all done online. My clients knew that they were in an HOA. The lease says that the covenants and restrictions are a vital part of this lease, and they're attached as Exhibit A, except there was nothing attached as Exhibit A. And then the biggest issue, and it's also an integrated lease, which says if it's not here, it don't count. Doesn't matter what we said beforehand, but if it's not on the lease, it does not part of the agreement. So my clients were told, hey, you're not supposed to park on the roads, and now you got to park on the driveways.
Okay.
Except that a whole lot of people on their road park on the road.
But you know, as an attorney, you would not allow that to be a reason to break the restrictions.
Oh, well, I'm just saying
everybody else breaking the rules doesn't mean you get away with it.
I agree, but the law in Florida is if the roads are owned by the municipality, you can park on them, unless there's a municipality rule that says you can't.
Okay, and are the roads in this subdivision owned by the municipality?
You don't know when you go there.
Okay, but the question is,
the roads are owned by the HOA.
Okay, well there you go.
But where's
You're
the
talking
notice?
Attorney?
Of course I am. So what happens is
because the roads are turned over to the HOA or
by the developer.
Correct, by the developer.
So,
right.
but there's nothing that says that.
Mm-hmm.
Okay, and if you're not,
that's not true.
Nothing that says
it's in the public records.
It's in the public
right,
records.
So what do you always tell me about the public records?
You have notice.
You have notice. Whether or not
I don't think that a tenant has notice like an owner has notice.
They're public. Bull crap.
Well,
by the way, you've already won this case.
I did win.
So it doesn't matter what I say. It's not going to affect your standing. But I can still disagree with you.
Of course, but remember,
Because you're brothers. That's why.
No, because he's wrong. You have public notice.
You do have public notice.
You have notice, because if he was
then,
on the other side, he'd be using that same argument, John.
Well, of course, he's an attorney.
But I'm point operator. But the point is, the tenant doesn't have the same duty to investigate as a owner does.
Fine.
Okay.
I'll let you go with that one.
All right. So, thinking that everybody else is parking there, there must be public roads, so they just don't like it. Okay. So, and believe me, I've been in that subdivision at 3 in the morning taking pictures.
I'm pretty sure you have.
I have.
Knowing you.
Okay. Because, I kind of want to know what's what. And so we get into this. Oh, and it's like one of the issues was they dinged them because somebody borrowed their one of them is a roofer, okay, and
roofer, not a roofer.
Roofer,
not a roofer.
Okay, he has a ladder to get on top of people's houses.
A shingler.
And so somewhere around Christmas time, the neighbor borrows the ladder to put up Christmas lights, and then returning it, doesn't put it on the truck, puts it on the side of the house, leaning up against the house, on the ground.
Okay.
And they got dinged for that. And then, about a month later.
Tell me what association this is.
I will later.
Okay. Not on. Okay.
No. But then about a month later, in January, it happens again.
The ladder.
Okay. Okay. So all this stuff, and then there was some stuff that happened to the road right in front of their house that they think was stuff that fell out of their trucks when they're parked on the road, and yet they don't have any pictures of anything dripping out of the cars. Okay, but they dinged them for that, and they decided to evict them for it. So we had a trial that was 2 different half days, basically. And at the end of the day, the question is, number one, where are the restrictions that you say were attached? Okay, this was you guys had.
I get it.
Okay.
I get it.
That contract means something.
I get it. Had the restrictions been attached, though, this would still be the same issue. They just got lucky.
Probably. Okay. Again, I but the point is, I live on a dirt road for a reason.
I know.
Because I do not like HOAs.
Yeah, I don't.
Because they got people that do nothing but drive around looking for stuff.
I get it. I'm a redneck. I mean,
was this a case that you won?
Yeah.
Right.
I mean, my clients had like cameras like in the middle of the garage. So they're saying you guys are parking out there all the time. People are there for visiting you, parking. We got pictures, 5 cars out on the road. None of them are my clients. Okay, their property is up on a gutter, so there's a little bit extra room, so people park there. And there's one night, there's video in that same camera that there was a Tesla parked next to their driveway, and somebody in the middle of the night comes in and is just driving very fast, hits that Tesla.
Really?
Yeah, we got video of it.
Was it a Tesla issue, or was it just the guy was drunk?
Somebody was. I don't know why.
I'm talking about the Tesla issue. While people are vandalizing.
No. That was a Tesla parked there.
Oh, it just happened. Whatever car would have been parked there would have been hit.
But it's just Tesla, so that was cool. Right. But anyway, so they had that. It was just all that stuff, and the best part, of course, is now I haven't seen the order yet, and I gave a proposed order that the judge is using to make her order. But last week on Thursday, we had a little hearing because it'd been a month, and she wanted to tell us what had happened and wanted me to give her a different version of my order. But the look on the plaintiff's face and the plaintiff's attorney's face when she said, "I'm not entering the judgment of eviction," was priceless.
But the point is that the homeowner's in trouble with the association.
Probably. Well, I'm pretty sure they're going to work something out because this lease is going to end sometime. And now they know where they screwed up. Look,
they being the landlord.
The landlord. Look.
Because they should have had the restrictions attached as the exhibit. That's really what this whole case rests on.
And they should have said something like, these roads are owned by the HOA.
So the whole issue is that Well, I mean, the reason that your client won was because they were not told. They were not
right. My client's pretty good people.
But if you were on the other side, you would have used the fact that it's public notice. You would have done that.
I would have done that, but I think the problem is, and I've got case law on it, there's a different responsibility between an owner
and I get
and
that.
I
get that. I get that. But you would have argued that.
I would have, up to the point of thinking it's not going to go anywhere.
Okay.
Because once I realize that something's not going to go in there, I don't want to argue it. Just to argue it.
I understand.
See if I can't. I have a duty not to try to, persuade the judge to do something they probably shouldn't do.
Right.
So,
this also comes back to when you sign a lease.
Read the bloody thing.
Yeah. What should somebody do in that situation? Leases can be quite complicated.
Well, this is a residential lease, and there's a lot of pages and addendums to it. They're not horrible, but what's interesting though is my client testified that when she read the part about the HOA and it's attached, she said, "This is not attached. Where is it?" "Oh, we don't have it."
Why put in the lease?
Because it is a necessary term.
Yeah.
But they didn't have it.
But if I were on the opposite side, I would have argued, well, see Exhibit A or see the public records.
Well, again, I don't know why the landlord didn't say, well, these are recorded somewhere and they're probably on our title policy. So let's go ahead and attach a copy.
Or they could have called us and we would have given them a free copy.
Of course.
Right.
But it's just that's where it turns. So, people need to read leases, but if you're going to make a lease and you have terms, make sure you understand what the terms mean. And make sure that you, if there's something supposed to be attached, make sure it's attached.
Mm-hmm. And that's so interesting, right? Because, you have these HOAs, PUDs, neighborhoods, they have the rules. People lease the houses, they have the tenants don't know the rules, and then you have problems.
The landlord's going to be the one. The landlord's going to be the one that's in trouble.
Of course,
well, the landlord becomes liable to the HOA.
You're parking outside your driveway, right? And then you're parking in the public street, and then some of them have rules, right? You can't do that. But if the tenants don't know that, is that what is?
Basically, they didn't know that.
Yeah, I know.
They were kind of verbally told this, but then there's all these other people parking in the street.
Right.
They didn't say, "Hey, you can't park on it because it's owned by the HOA."
Right.
My client happens to know that the law changed that you can park on a municipally owned street unless there's a municipal lien or a code that says you can't.
Says otherwise.
And there wasn't one, so she thought she was okay. But then there's all these other people parking on the street, some of which are also tenants of the same landlord. But they talk about rules. I mean, you have the covenants and restrictions. But a lot of boards have rules, like day-to-day rules. Like,
and you handle cases like this.
Oh, yeah.
I know, absolutely. See, that's what I did. I gave a plug for you, Mr. Rusty Collins. That's what I did right there.
Thank you, John.
Exactly, of course.
So, but, the boards can have rules. They can make up rules, okay? They can basically, if it says you got to keep your yard nice, they can say, do not put a ladder on the side yard, okay? And it was kind of fun cross-examining the person saying, can you show me in these documents where he says we can't have a ladder on the side yard? Well, they knew. No, show me where does it say that?
Right.
And about 5 times later, they finally says, well, it doesn't say that explicitly.
Right.
So you get into that, but you could have rules that say you can't have.
What would it cost for something? Again, leases can be complicated.
Right.
Agree?
Well, if they're using like the residential lease that a lot of real estate agents use, it's made to fill in the blanks, and then it incorporates the statute.
Which makes it easy for you to look over for a client. What would it cost for somebody to say, hey, Rusty, I'm about to sign this lease. Will you review this for me?
Well, you're looking at probably 30 minutes worth of time, so probably $150.
Okay.
Maybe less, maybe more, depending on what's going on. I don't have a card rate.
That's fair, but that's a fair range.
Give me the worst case scenario.
$6 million.
Okay. Can they make payments?
Maybe. They got a reverse mortgage.
Exactly.
Blake, what is our time limit tonight?
We got
5 minutes.
So, Blake, are you going to make us end up in 5 minutes, or can I bring up one topic that maybe make us go over 5 minutes?
We can do it. Go ahead.
Oh, yummy.
Uh-oh.
So, John,
Now we're playing Stump the Chump.
no, we're not playing Stump the Chump. I just have an interesting story I wanted to bring up with you on this show. We have a situation, and this is live happening, right now. It's an issue we're dealing with. We have a person who bought an investment property. He's fixing it up to sell it. Okay.
Okay.
He fixed it up, did a beautiful job. He had some trees in the back, and the neighbor in the back said, hey, your trees are on my property. What are you going to do about it? And the owner of the property said, well, trim whatever you want. Now, why are you looking at me that way?
Okay.
We've got trees along the back fence.
Right.
We have a fence.
Right. And
we have the tree growing up.
Right. And
we have some limbs going over
on the other side.
On the other side. The owner of the property says to the neighbor in the back, trim whatever you want.
That's unwise.
Why?
Well, because trees are living things, and you could trim them wrong, and they could kill the tree.
Okay.
And that could cause a problem, make it fall down where you don't want it to fall down.
Fine.
That's one thing.
Let's assume that that's not going to happen.
Okay, then we have a duty to our neighbors to not let our stuff mess their stuff up.
Okay.
So if you have a tree that's healthy and big wind comes by and blows something off,
I had this problem.
But if you have a tree that you know has got a problem and you don't deal with it, then you'll be liable.
Well, let me share with you a tree that was on my Nautilus house.
Okay,
that I used to own. There was a big tree in the side yard. I mean, this is a big oak tree. The limbs stretched out and reached over the roof of the neighbor. The neighbor came to me and says, what are you going to do about that? I said, well, nothing. Now, they paid for a tree company to come and remove that tree. Okay.
Okay.
The tree or the branches?
The entire tree?
Excuse me. Thank you for John.
Yeah, I know. We're just listening.
I need to clarify.
Nice conversation. We were hanging out, listening. Yep.
The branch.
Yes.
Okay, well, if they had a tree surgeon come do it,
mm-hmm.
I would expect somebody who does that for a living is competent.
Could they have argued that it's my tree, so I should be liable for that limb? Julie doesn't say much, but she's back there shaking her.
I've been following this because living downtown, there's a lot of live oaks and cedars. The city is very particular about it, and it was up for a vote for change in homeowners insurance. But I believe they've reverted back to where it stands is that the tree is on your property. Anything that goes over your property, the other resident can take care of, or you could if you wanted to. They can't come after you for it. I think if it's a dead tree and and it falls down, yes, you're liable for any of the damage. If it's healthy and is blown down, I think they still file their own insurance and you file your own insurance. Does that make sense?
Makes sense to me.
Yes, that's I
Rusty,
believe
you
where
concur?
it stands.
Mr. Attorney, man?
We all need to be responsible, okay? So there's always a risk a tree can fall down.
He's actually giving me the stump the chump look.
He's
like I almost stumped him. He's getting that look.
Well, you have to understand, I don't know that there's...
Thank heavens you have a laptop.
Yeah, I do. If you have a tree with a trunk...
And I love that look, by the way. When he gives me that look, I'm actually giving a hard question.
Okay, so the tree is on my side of the property.
Yeah. No,
limbs are going across the fence, or across the line, and maybe over the roof of the neighbor.
Maybe.
Yeah, I'd be cutting that. I'd be fixing that.
Who would?
I would.
As the owner?
As the owner. I don't want the liability.
Or as the backyard person?
I would want to take care of that if I'm the owner, or maybe split the deal with.
But she just told you that it's not your liability. Why should it be your cost if it's not your... I mean, there's the thing about being neighborly. I get that, Rusty. Okay, I'm going to be neighborly. I'm going to pay for this tree to be trimmed because you want it as my neighbor. But I'm not obligated to do that.
Some of those live oak branches, for instance, the one that goes over my neighbor's house from my tree, will cost over $4,000 to take that one branch down. It's massive.
Again, if the tree's healthy, we all have the risk of a healthy tree getting hurt. True. Okay, as far as falling down or things falling out of it. If you know the tree's got a problem.
We don't know the tree's got a problem. Take that out of the equation. That's not even an equation here. Healthy tree that we know of.
So let me ask a question.
I'd be looking at liability. I'd be looking at the
correct. But is there a black and white answer to it?
I think there is.
I don't see one.
I know, I don't either, because it comes down to if the branch is hanging over, like we're all talking about, right? I mean, is there a black and white answer? Because if the branch is hanging over the house, but you as the tree owner, you don't have the money to pay.
Or I don't want to spend the money.
Correct, absolutely. So then could Right. I know. I don't know if there's a.
I think that's where good neighbors come in. You have that conversation. If it's a couple scrappy little branches, it's not going to hurt the tree. But if it's something substantial, if you cut that large branch off the live oak that we're talking about, it's going to make that tree very lopsided and susceptible to the next hurricane.
I know.
That comes
That's
by.
why you.
So, like, I'm unsure if there's a black or white answer, or
Sometimes-
right or
I think
wrong.
the black and
Sometimes you
white
have to do a reverse
well-
mortgage to be able to put it in paper.
I think the black and white answer is this, Rusty, and that is you're not liable. If the neighbor wants that tree cut, they can pay for it to be done. I think that's
That's true. I mean,
that's something where they can't force and say, "Hey, you've got this tree in your yard and its limbs on my side of the fence, and now you must cut it." That's not what has to happen.
That's not what I'm talking about.
Okay.
I'm talking about if that branch falls, okay,
Mhm.
and somebody can prove that you should have taken care of it, I think you may have some liability.
We can agree to disagree on that point, but let me finish the story.
No, if I go fix if your tree is encroaching on my property and I cut it down, I don't think I have a right to just hand you a bill.
I agree.
In small claims court. I'm not saying that.
I agree.
Yeah.
So what happened in this situation is the homeowner told the neighbor that if you want to trim those trees, and there was a whole line of bushes of kind of what do they call those, evergreens?
Okay.
Those nice,
The
evergreens.
pines that have
pines come out.
and they have really small roots.
I don't know, maybe.
Maybe not
I'm
really.
not a tree guy, but so, and they go along the back of the property line. So he says, sure, cut whatever you want on your side of the fence. He's under contract. He's got a closing date. Comes to inspect the home 3 days before closing. He did not only trim the limbs on his side, where the fence is, the top of the fence, he cut them off.
Right. Yeah. See.
Now, he's got a buyer that bought this property based on some privacy of the trees, and now the buyer doesn't want to close. Mr. Attorney, what should the homeowner do?
There's a whole lot of
It's like
there's a whole lot of it depends on this one. Okay.
right.
So number one,
Does this encroach back on the drone airspace that they've?
okay, everything here there's going to be some minutia that's going to matter. Okay.
Oh, well, get into it.
First of all,
Blake's giving us time to go over. So.
okay. Well, first of all, did we sit there and watch the neighbor cut all this stuff off?
No.
They did it in the middle of the night. We didn't.
No,
know.
we don't live there. Remember, this is an investment property. There's no way for us to have noticed to have stopped them.
Well, I think the seller made an error. In that.
Oh, how's that?
Because he kind of gave the other person carte blanche to do what he wanted.
You can trim the limbs on your side of the fence.
There may be some liability with that neighbor.
Okay.
Okay.
What would you counsel my homeowner, my investor, to do? Just bend over and say, thanks, Tom?
Not necessarily, but I don't know enough about this.
He's lost a buyer. He may not get another one.
Was that buyer in his due diligence period?
No.
He
Due
was
diligence
outside.
passed. They were ready to close. They signed off on everything. You can't sit there and say a
because
buyer's
you can't-
obligated to close when something of a material nature has changed.
Yeah, because they get to check. They do a walkthrough to make
That's
sure
right.
things are as they're supposed
That's
to
right.
be, whereas they
So
were.
they are out.
Yeah, I think they can probably back out.
So now this guy has lost. He can't, and if for some reason, for whatever reason,
Well, here's one thing for sure. How did he do that without trespassing?
he had to have. They did it from his side, mind you. They
cut the tree.
They grabbed. Now remember, these are these evergreen things. Okay, so it's not like you can have a grab and cut and pull over. And he did that. He didn't cut and push them over on the homeowner's side.
No, I'm trying to say
he cut the trees and pulled them over his side and hauled to the front of his
right. But
property.
the tree, he was cutting stuff that was not. He had to trespass, even if it's
airspace.
even if it's in the airspace.
Yeah, he trespassed on
3
the
feet,
airspace.
2 feet on
Whatever it was. It was probably about 3 feet.
So trespassing is a criminal thing at times, but it's also a civil thing.
Right. So what do you do? What does he do? Calls the cops?
No, you can sue for trespass
It
because
worked
there's
for your
damages.
other clients.
You can sue for trespass and for the damages from trespass. Okay.
How do you equate the damages for a lost buyer?
there is a market value as of the day of closing and a market value today, or at the time that the damages are established. I don't know. The value went up and you're able to sell it for more because they didn't close, then you don't have any damages. There's no liquidated damages.
Well, you do. You have time.
Well, there's
interest.
There's time, interest, and what I couldn't do. You have to prove those damages.
Right.
Okay. But you have a trespass because you did not consent to that. Okay. Now, I'm not saying the neighbor's evil. They may have made a mistake, but they don't have to be evil for this to be trespass. They intentionally did what they did. They didn't accidentally do what they did. It was intentional. It may not have been malicious, but it was intentional. Therefore, it can be trespass. And, damages from trespass are damages. I mean, they caused the problem. You got to figure out how to measure that. And that's going to be up to most likely a jury, okay, to figure that out. But there's damages for that. And he would need to get a lawyer and sue for it.
So, and you can't imagine how tempers can flare.
Oh, I'm sure tempers can flare.
I mean, this, again, we talked about this 2 weeks ago. Two people, for whatever reason, just aren't hitting it off. And they're yelling at each other in the back, yard. I mean, this can escalate.
Well, I think.
What would you counsel them? Because there's obviously some engagement. The person behind, our homeowner, the neighbor, it's clear he did this out of spite. Okay, because he said to the homeowner, "You need to cut your limbs off my property." And he's like, "I'm not going to do that. You can trim whatever you want to." So he did it out of spite. Okay. What would you encourage the homeowner to do in this situation to keep it from escalating?
I would not be having any more conversations.
Stop all conversations.
Well,
would you do a, what's the word where you stop somebody from communicating with you? I'm sorry.
It has no legal, there's no legal, if I say
what's
stop
the word?
Cease and desist.
Cease and desist. Yeah, sorry.
Okay, stop talking to me. No. That's you can ignore, but I think I would not engage.
Okay, not engage.
Because you don't want to say something stupid.
Right.
And you don't want to enrage people more than they already are. Sometimes it's good to
I know the next step, they should get an attorney, right? This is not a self-help.
Oh, no.
You're not going to go to small claims.
No, probably not.
Okay. How much legal fees do you think someone would incur?
Too much.
Look, come on.
Okay, by the time you get done with this litigation, it's going to be 10 grand or more.
Okay, 10 grand or more. And he's not going to recoup that from the neighbor, obviously, if he wins.
I doubt that he can. There'd have to be a statute that says it. I don't know of one.
Okay. So he's gonna lose 10 grand to fight a battle. So the question is, he's got to measure this out as to,
Sometimes it's better to take the hit, and you'll be happier quicker. Okay. Sometimes you can't. The law can't right all wrongs. Okay. Sometimes you take the hit, and the universe will be fine.
Easier said than done.
It is easier said than done, but sometimes that is the best way to be happier quicker.
Hey, buddy, turn your head. Go ahead and read your New Testament, turn the other cheek, smile, try to sell it to somebody else for 20 grand less because it's not as appeasing, not as beautiful, and just smile. Why don't you?
Well, I'm not saying that's the right thing. I'm just saying you got to consider all aspects here. Okay? The justice does not always make you happy. Because you might get a judgment, then what are you going to do with it? You can't force him to sell the house because of it. You're not going to force it against the home.
Well, if the action was caused on the homestead property.
No, that is not one of the exceptions to the Florida homestead.
It's worth a try.
Yeah, you won't get very far at all.
No, but if I hired somebody to work on my property, and it's my homestead property, and they file a judgment because I didn't pay for the work, they can foreclose on the homestead property.
That's one of the exceptions.
Right.
Okay.
But this would not fall under that exception.
No.
All right. So your counsel to the world is?
Get good advice on it and consider the advice
your counsel
carefully.
is don't do anything about it.
Oh, I wouldn't do anything violent about it.
No. I don't know that I know you're not saying anything violent, but you're saying don't do anything.
I'm not saying that. I'm saying you need to look at it.
Well, then what would you just give a suggestion?
There's a whole lot of counseling.
You're not willing to put your name, to put yourself out there. What would you tell somebody? Wait a minute, this is all
It's very simple. I'd say
the guy's coming to you right now.
Okay.
He says,
Then
I'm
I
willing
would
to pay
counsel
you
with him.
$10,000 to take care of this problem for me, Rusty.
I may not be able to take care of it for $10,000.
$15,000, Rusty.
Right.
Will you take the case?
But here's the deal. You give me $15,000. What happens if all you can get is $10,000 in damages?
Yeah, make me feel better, though.
Not necessarily.
Okay.
I have some experience with that.
I know you do.
Okay. So.
All right. This has been Land Title Talk. We have fun talking about these things. I'm Steve Collins from Land Title of America. You can reach me at Land Title at 904-797-9600. We do real estate closings and title insurance for all your real estate transactions. When John does a reverse mortgage, he needs a title company, and that's what we do. So we also take care of purchases and sales and refinances and all that good stuff. We'd love to assist you in any of your real estate transactions. And, our motto is stay local. Don't use out-of-town, out-of-state title companies, because when something bad happens, you got to call 1-800-WHO-GIVES-A-CRAP. And we don't want that happening to you. We want you to have somebody competent that you come in, walk in the door and talk to somebody and walk through the situation and help you get through the challenges. There's challenges out there. Rusty, tell them a little bit about you real quick.
Well, you can find me at 904-829-6600. I do most things that are related to dirt. I love dirt law. And if you need help, get help. Can't get it from me, get it from somebody. Don't do these things by yourself. Get some counsel.
Yeah, don't do self-help.
Self-help quitclaim deeds are horrible.
Yeah, we're going to talk about it some other time too. Appreciate Julie being here, always keeping us in line, looking up information, and appreciate you. I know you send me some messages that I don't always respond. Forgive me about that. We had somebody type in a couple messages and questions, and we did actually address one of them. Thank you very much. So appreciate that. And John, how do they find you again?
You can call me directly. I'm local, 904-982-2210. 904-982-2210. Thank you.
We appreciate you being here, John. There's a lot of questions about reverse mortgages, and I really appreciate you spending the time and going over those with us. And I would encourage you to give John a call if you have any questions. He's great to talk to. He's actually funny too. But so thank you very much. And gosh, we'll be back in a week, and we look forward to seeing you then. Thanks.